the Kalahari budget update. We always celebrate. Us accountants, we enjoy it. But let's just talk about the things that have happened in this budget that we just want to highlight. And if you have any questions, you know where to find me. It's really important, I suppose, to stay on top of it. This year has been a little bit muted, I would say, because a lot of the things that we were expecting didn't actually quite happen, like around simplifying capital gains, GST, and I guess the tax in total. So a bit quiet in that aspect, but hopefully there can be more to gain in the next year. We'll start with the personal tax. That's always a big topic. Everyone's going to have a higher Medicare levy to pay. So currently the Medicare levy is 2%, but then that's going to go up to 2.5% from 1 July 2019. Why it needs to fund the National Disability Scheme that was introduced a couple of years back. At the same time, they're going to get rid of the budget repair levy. That budget repair levy only applied to people that earned over $180,000, so where your taxable income was over $180,000. If it was any lower, you never saw it. So they would be charged some percentage as well. And I guess there's a question that I always get. Why do I have to pay Medicare levy when I have health insurance? You know what? Good question. I did a blog about this, so check it out. It's all about the concept as to why you have to do it, and it's a great idea too. So that's the personal side of tax. Small business. Whoa. Not much. I'm personally disappointed. But the only thing that's going to happen is the $20,000 deduction is going to continue. If this is the first time you've heard it, what happens if you buy an asset that costs less than $20,000, and this includes cars, then you can claim the full cost of that in your tax return. So that's really the only thing. They're going to extend it till the next financial year, so 30 June 2018. At which point it will be under review. So there was a few yeses and ahs, because that's awesome if you need an asset. It sucks if you don't. So I don't need an asset and I need the deduction. So I'm one of those people that are like, oh, I thought I was going to get something. But that's all small business is really getting that's worthwhile talking about. Oh, the other thing about small business is that $20,000 now applies if your business makes less than $10 million. So the small business threshold used to be $2 million, a meager 2, and now it's $10 million. So that's good for any business out there that was making just a little bit over $2 million. The $10 million is a comfortable reason for you to claim. Plus, I guess that's the only one we can kind of go, yeah! Banks! Oh, the poor buggers. So the big four and Macquarie, because that apparently isn't big four, they're going to get a bank levy to pay. If a bank has more than $100 million worth of assets, actually let me double check that. Scratch that, $100 billion in assets. Imagine. That's why it's just the big four and Macquarie, I was wondering. A few concerns here from the industry in the sense that, okay, what happens to investors because they get dividends, or customers? Will they end up having to foot the bill pretty much through interest rates or bank fees? The government thinks, okay, well, we'll talk to the ACCC, and the ACCC is going to look at how they can ensure that this levy does not get passed on, I would say, in an unfair manner. So it doesn't affect us, but it can affect us. So it's for the banks, but then, as we know, things get passed on to us, sometimes not in full. Okay, property. So at the moment, property developers, they give the GST to the ATO. But now what the government wants to do is make sure that the GST is actually given to them directly on settlement. So settlement agents, you're up. And this amount is going to be paid through at settlement. So it's for new residential properties and new subdivisions. It's an integrity measure just to make sure that they get their share. Who knows? We'll see. A big chunk of this budget was around housing and making it more affordable for people to access housing. So for individuals in general, they're introducing a way for you to contribute more into your super fund up to $15,000 per person, so $30,000 in total for a couple. And that $30,000 maximum goes into a separate account into your super fund, and it's taxed at 15%, like the earnings are taxed at 15%. Any money you take out of that super fund will be taxed at your normal individual tax rates, but you'll also be entitled to a 30% income tax offset. I don't think that's refundable either. So if you're over 65, you can now contribute, hey, $300,000 per person from the sale of your house. So the net proceeds you get, the net cash, you can put $300,000 each into your super fund. It's not taxed, nothing, no questions asked, except there's always rules to the game. So what are the conditions? Well, number one, you must be over 65. Number two, the house must be at least 10 years old. Number three, it has to be your main house. And another condition, it only starts from 1 July 2018. So let's not jump for joy. There's still a budget before that date too. Investors have been given a bit more chance to help with affordable housing, and this is through what we call MITs, and the long term is Managed Investment Trusts. Lots of definitions there. This is just FYI. I don't have many clients on it, but basically what happens is if you invest in an MIT, it ensures that the housing is available for rent for at least 10 years, and then you get some capital gains benefits as well. So the capital gain discount will be 60% instead of 50%. The discount, what is that? So let's say you make a gain on a property of say $10,000, you get to only get taxed on, $4,000 of that. So you get a discount of $6,000. So that's what's available. Of course, that means you have to double check. Don't do it through a company. Do not do it through a company, but call me. That's my thing. There's no legislation as yet as to how this will work. So this is another topic. Of course, give me a comment down there and tell me, and then I'll do a full video on it. I'll read all the accountanese and I'll get back to you on that. Rentals, can't claim travel expenses anymore. No, the ATO is wondering how genuine these expenses are, and that starts from 1 July 2017. I would be very careful about trying to maximize the deduction now, especially knowing that the ATO is going to phase it out. Foreign investors, the government is now formalizing that. So there's no concessions whatsoever from being a foreign investor. Before, you could get the 50% capital gains discount and reduce your proceeds by half and only put half of that into your tax return as income. But now that's not available at all. And then secondly, they're limiting the ownership of foreign developments, and that's really 50%. Only 50% of the owners can be foreign owners, and the rest have to be local, which is kind of fair. A lot of countries do it, and I guess it's time that we did, and that applies from the 9th of May 2017, which was on budget day. And also they're going to introduce like some sort of a fee for any houses owned by foreign owners where the house isn't genuinely rented out, or if it's not occupied at all. Genuinely rented house or available to rent house, I guess, should be advertised, and there will be guidelines coming through as to what that means. Super, wow. So with super, currently if you are under 49, you can contribute $30,000 into your super fund, and then if you're over, it's $35,000. But come 1 July, you can only contribute $25,000 a year. This is presenting a few issues. If you are under a salary sacrifice arrangement, you are affected by this, because if initially you were just under the $30,000, now you're over, and there's penalties for passing these limits, and that limit is called a concessional contribution, where your employer contributes super for you. And if this amount is over the $25,000, there's penalties that pretty much discourage you from passing it. So you're taxed at the highest level of tax, which is it can be like 47.5%. A bit saddening, but this is where it's headed. Oh, there's one more. The ATO is also giving more money in the millions and billions of dollars towards fighting the black economy, targeting crime pretty much and money laundering. It sounds comical. It's a serious thing, honestly, especially after what just happened in the last few weeks. And, it's good to start in your own backyard, I suppose. It's a good way of showing confidence. and it's really important that they put that in there. But also they're going to do more tax audits as well, because cash economy is always big on their list. So if you receive cash in your industry, they know that, and I think they're going to put more money towards that. And that's it. That's the budget review. Please, questions, comments, put them down below. Email me. And you know what? YouTube says there's a button there that shows you care, so please like this video and let me know, and it will make it easier for me to make more. Alright, have a good day.